When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. It's nice enough to come on and talk about what's happening in the marketplace. Shawn, how you doing, man?
I'm pretty good, Casey. Really, really good.
Good deal. We had a hurricane roll through Florida, and it didn't really pack the wallop that they thought it was going to pack, but a little bit of rain came out of it. Not too much craziness happened, I guess. So, Shawn, as you look at this hurricane, what are your thoughts there, and how much impact you think that'll have on any kind of markets out there?
Well, first of all, remember, it hit an area that's probably the least populated area of Florida, but it's just extremely unpopulated. So the direct hit was in an area where, the hit to property and it doesn't mean no one lived there, and those that did live there, it was pretty catastrophic. But for the most part, hitting Tampa, hitting more like Tallahassee, or hitting Jacksonville, or, it just hit an area that you're just not a lot of impact to human involvement. Secondly, all the citrus crops and the sugar crops are primarily to the south, so it didn't really do anything there. It was too far to east to mess around with the rigs in the Gulf Coast. It did impact some cotton in Georgia to some extent. But the core was sort of out of the area of the area of serious flooding. In those areas, probably got some meaningful positive rainfall. So net effect, I don't think there's much of an impact there. Probably the biggest impact of all was the surge that we got. If you looked at the flooding in Florida from surge, that's where most of the catastrophic flooding came from, not actually the rainfall. If you look at the flooding that occurred in Georgia and into South Carolina, it was really flooding due to a surge and a super high tide, because we had a super moon, blue moon kind of thing that just happened to occur, right when the surge was its maximum. So, that had some damage. But overall, in terms of markets, just not a major impact.
Yeah. Okay. Dodged a little bit of a bullet there than what you're saying.
We sure did.
Awesome. Okay. All right. Well, let's take a look at, you got this your September report coming up here in a couple of weeks. As you're taking a look at this, Shawn, I mean, there's a lot of anticipation out there. I think the market's making some moves right now that are a little bit, they're not really hinging on weather in the U.S. and not really hinging on what the overall crop looks like, but there's a lot of geopolitical stuff that's being played in that right now. When you look at this September report, is there better opportunities? I guess, is there more anticipation for a bearish report, or do you think there's more of an opportunity for a bearish report here?
Well, we know that September is the first report that the USDA actually uses real data. They still have a lot of it, but they start using real data, and that number starts to move in the right direction, whatever direction that is. August is notorious for being wrong. So typically, whichever way they move in September, that's the direction they're going to move in October. So if they raise yields, then it's a bit, big crops keep getting bigger. If they lower yields, small crops keep getting smaller. So it's important from the standpoint that that's kind of starts what the real trend is for the yields. Obviously, the way soybeans have rallied on the hot, dry weather from mid-late August that we had warned about several weeks ago, the market is anticipating that yields are going to be considerably lower than the last USDA report and potentially than the crop report that Pro Farmer put out. So whether or not they say that in total, I think they will move down in the direction that the soybean crop is going to get smaller. Now, how much is priced in? That's always the trick.
Right.
We put on $1.50 on, so is it all priced in already? Are they going to still get surprised? That's a tougher thing to figure, but I think I think everyone realizes this hot, dry weather that's going to continue as far. It's going to continue into the complete end of the maturation of the soybean crop. The crop's going to get smaller. It's a question of degree, and has a move from 12.5 to 14 factored in that in, or do we need to do more here?
Yeah.
Obviously, the USDA's take on it will set the bar on that, but for the most part, soybeans have a pretty bullish supply-demand balance sheet, U.S. balance sheet, and if you look at the acres and you look at, let's say you lose a 2 bushels to the acre or a bushel to the acre, you start getting yourself back to that 200 million bushel carryout, 220, 180. The USDA will never say it's less than that. They just won't do it. They'll just come up with they'll make believe some other numbers to not. They just won't ever tell you it's below that. So bottom line, soybeans are tight. Of course, if that's assuming soybean export demand remains on the weaker side. If the soybean demand surprises over the next crop cycle, then we're got our demand ration. So there you have it. On corn, it's you can lose a little bit of corn yield off the top, not a whole lot anymore. The crop's done. It's kind of made. We just have to decide what's out there. I think the USDA was at 175 in July. I think I think that probably will move down a little bit on corn, just because the weather definitely has hurt production a little bit. The Pro Farmer Tour, I think their net yield was 173, I think, or something like that.
Yeah.
So, quite frankly, Casey, we're looking at a similar crop yield as the last 2 years, really. Low to mid 170s, low to mid 170s. We can't seem to get out of that range.
Right.
Low trend, but not devastating. If you believe the demand side numbers, it still means we're going to have plenty of corn, and the market's trading under $5 because it still says that's going to be plenty of corn. So to take people off of that, you'd either have to have the USDA provide a larger decline than the market's expecting, or demand's going to have to show up. We're going to have to see some strong buying from China, from somebody to change the balance sheet view. I kind of feel soybeans are kind of nearing fully expressing this tighter balance sheet, meaning $14.50 on the November contract looks to me like pretty strong overhead resistance that I'm not sure we're going to take out. At the same time, on corn, I don't think, given the smaller crop idea, that the balance sheet's going to get bearish enough to warrant going below 4.5. So right. I kind of feel like we have these. I think we've established what I would call trading ranges: 12.5 to 14.5 on soybeans, 4.5 to 5.5 on corn, and I think we're just going to kind of oscillate, Casey, back and forth based upon currency, geopolitics. Obviously, South American weather will start to become a factor as we start the growing season. And obviously, USDA will alter people's perceptions as they continue to put out their reports over the next few months and determine. And of course, we're actually going to get harvest results. I mean, we're going to hear yields off from the field. We're going to start getting a sense for, everyone thought it was supposed to be that here. What's actually showing up on the combines? And
right.
We'll have to see. But for the most part, typically, seasonally, we look for a harvest low, late August to late September. Farmers will have to sell. Those that don't want to sell, who have sold enough, take the corn and lock it up in the bin and say, I'm not selling another bushel until the new year. And that usually gives you that post-harvest rally. That's pretty typical. I'm expecting an earlier harvest flow because I do think that the smaller crops and the hot, dry finish and the geopolitics warrant that. So, it's. I think actually we're kind of enter kind of a boring phase for grains here for a little while until South American weather and or geopolitics gets more impactful again.
Yep. Okay. All right. Let's talk about two more things. One, let's talk a little bit about what you've seen happen so far this week, coming off of the Pro Farmer Report. It's been a topsy-turvy week. A lot of volatility, up one day, down the next. Intraday moves are amazing. So, I guess as you're looking at that, what are some of these factors you see right now that are twisting this market into knots here?
Well, right now, I mean, I think the day-to-day fluctuations has really been about the U.S. dollar. It's been really, we had a big up last week, and then we had a hard down. Then we had a big up, then 2 days down, and now we're up big today. We had weak consumer sentiment yesterday. We had weak economic jobs report yesterday, but we had strong enough economic consumer expenditures today. It just seems like the market is trying to outguess, second outguess, and third outguess. Where's the Federal Reserve? The Federal Reserve at Jackson Hole said they might tighten some more. So the market, the U.S. dollar is just all over the place. It doesn't have a strong direction. It's not sure what they should be doing. And so those fluctuations, which have been fairly strong in either direction, are driving short-term trading sentiment in commodities, which obviously are impacted by whether the dollar is strong or weak. Until the U.S. dollar gets its act together in determining the trend, I think the currency-related volatility is going to be with us. That's what's primarily driving the markets right now, Casey.
Right on. Okay. We had a question from a guest. Sent one in. We talked a lot about the Glasberg cycle on here and what that looks like. You were anticipating a 23 or a 25 effect from the Glasberg cycle, with 24 in the middle being a strong El Nino year. I guess, Shawn, you take a look at your predictions now, the model that you have out. You did talk a little bit about this in the last report you put out. As you take a look at what's going on now, Shawn, what are your thoughts there?
Well, our work going back 11 centuries using actual data and then tree ring analysis data for the Palmer Drought Severity Index suggested that the Glasberg cycle is roughly an 89-year cycle that can happen in a 3-year window. One of those 3 years is typical. In the 1930s, it was 34, 35, 36. And we wind up having the 1 in 100 drought in 34 with a close second in 36. If you roll that out to now, it would mean 23, 24, or 25. If you look at 23, we were coming out of a La Nina, and the question was, could a hot, dry pattern remain in this crop cycle to create that 1 in 100 drought? Remember, we started May and June, very, very dry, but cool. We had variable weather pattern in July, meaning we had enough rainfall to kind of take the pinch off the drought. And then, of course, as you know, we're having a very, very hot, dry finish. We had all the elements, like everything was there. I mean, if we had this kind of hot heat and dryness in mid-July, it'd have been the Glasberg cycle. We were that close to this one being it. But it just, once again, we're talking about a 1 in 100 event. Everything has to perfectly come together to create it. And we just missed it here in 23. Now in 24, remember, the El Nino is going to peak out in December, and we're going to lose the El Nino sometime in late spring, early summer. Then the question becomes, how quickly will the El Nino effect end, and how quickly will the La Nina effect reinstate itself? Because La Nina or neutral conditions are more that hotter, drier pattern versus the cooler, wetter pattern that oftentimes is associated with El Nino. Obviously, when I look at all the historical patterns going back to 1950, the high probability forecast, Casey, is that the mid-July onward is likely going to be your traditional hot, dry La Nina weather pattern. The first half could be more variable, meaning you can have kind of some mixed conditions. So It doesn't mean 24 can't be the Gleisberg cycle. It just means that the problem is that El Nino is going to have, there's going to be a lag effect when El Nino conditions wane and when the La Nina, just like we saw this year, right?
Right.
My guess is it's not going to be a great year. I mean, it's not going to be an El Nino year because we're going to lose it. But I think it's going to be variable enough in the first half of the growing cycle that we're going to have, like we've had this year, a lot of problems, a lot of issues, some variability, but not enough to create the big bad crop. But not, but once again, good but not great. I'm thinking we're going to have similar below trend line yields, but not a catastrophe. That's the best guess we have now. Now, as we get closer, we have a lot of things like we always talk about signpost as we go along and we measure. As we get closer to mid-late spring, we'll have a much better idea of whether El Nino is sticking around in terms of the atmospheric response, or is it leaving early? If it leaves early, then we're going to heighten our awareness or heighten our view about a potential Gleisberg cycle for 24. Right now, based upon the best probabilistic forecast, looking at everything that we do, says not at the best weather season next year, but good enough to have good but not great crops similar to the last couple of years. Now, when we go into 25, we should have an all La Nina crop cycle. That's your best bet for the 1-100 drought, because your best bet for droughts in the Midwest is your La Nina cycle that is already in place, that's already in the atmospheric response by the spring, and is expected to remain through the crop cycle. That is your best bet for any kind of a drought cycle, and it's the best bet for those 3 years. That's your pure play. This past year it was a kind of a mishmash. Next year's going to be a mishmash, but that's going to be your pure La Nina cycle within the Gleisberg cycle window. So I would still say, based upon everything that we're looking at, that I would say the highest probability for the Gleisberg cycle to deliver would be 25. 24, probably not, but we'll watch the readings in the spring, and if we think we need to up the ante on that, we will. But right now, that's our best forecast.
Right on. Okay. All right, Shawn, good stuff as usual. Folks want to reach out to you and get more information about what it is you're doing over at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. We also have a Twitter page at Feridex, Feridex 11, at Feridex 11. We also have a LinkedIn page where we put some interviews out from time to time. We make a few comments. We're not habitual posters. We save most of the information for our subscribers, but from time to time we will put those out there that can kind of keep people updated with our long-term cycle data, correlation work on weather, currencies, capital flows, the things that help us make our recommendations to our farmer customers.
Right on. And they can sign up for your subscription-based service on that same place?
Correct.
Right on. Okay. Shawn, appreciate you being on, man. Look forward to next week.
Me too. Thanks, Casey. Appreciate it.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast, and go over to the YouTube page, which is the Moving Iron Podcast YouTube. Go to MovingIronLLC.com for everything Moving Iron related. And with that, I'm Casey Seymour with Shawn Hackett. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard work.